I think over the last 20 years you've had a lot of interesting things going on in LatAm that make it a much more interesting region to invest in. Governments in general have become a lot more stable. The region's had a history of being either quite far right-wing or quite far left-wing. And for the most part, most of the economically important countries within the region now have centrist governments. So this new stability in the region has allowed companies to start long-term planning. Within Latin America, the most interesting investment opportunities, we believe, are within the consumer sector and within sectors that benefit from the growth in domestic demand within the Latin American region. Brazil is probably the biggest opportunity in terms of domestic demand, because what you're seeing there is a number of people who are now entering the middle class in Brazil. You've had about 30 million people in the last 7 years enter the C class, which is the lower level of the middle class consumer in Brazil. And these consumers are now doing things that middle class consumers do: buy clothes, buy cars, take out loans to buy houses and the like. We've seen the consumers take on a reasonable amount of debt. Debt ratios of the consumer are now higher than they've been in the past. But if you look at the debt levels of consumer versus to household income, that's beginning to stabilise at the moment. And we believe that over time, as interest rates fall in Brazil and as loan maturities extend, the amount of money that consumers are spending on servicing their debt is likely to decrease. Chile is an interesting market. It's a little bit more developed than some of its regional neighbours. What you also find in Chile is that you get a lot of companies that are interested in expanding outside of Chile. So it's quite usual to find Chilean retailers, for instance, that have operations in Colombia and Peru. So within Chile, we have a couple of investments. We like the banking sector, so we have a bank that we invest in. And we also have one of these retailers that has operations in the rest of LatAm in the Andean region. So one of the larger risks within Latin America is risks of government within the individual countries. Although Latin America has got a reputation of having unstable democracies, these days the democracies themselves are quite stable, but you still get governments that are willing to interfere in some of the companies and sectors within the region. And that's always a risk for investors because governments tend to be unpredictable. We manage that risk by trying to avoid a lot of the sectors which are more prone to government interference. Aberdeen's been investing in Latin America since the late 80s. We've run dedicated Latin American mandates since 2004. So we have a fairly long history of investing within the region. We have a local presence on the ground in Latin America, in Sao Paulo, which we think is very important for understanding the region, getting to know the companies a bit better, and building relationships with those companies so that we understand them better. We believe that the medium to long-term outlook for Latin America is quite attractive at the moment. What you've got is a very powerful middle-class consumer within Latin America. Combine that with large infrastructure projects that are being undertaken at the moment by various governments in the region, particularly Brazil, and that provides very robust domestic demand that's likely to continue for the near future.